There's been political turmoil in France, and it's not showing any signs of easing. The US government is still shut down. Our guest says investors can look for opportunities in companies positioned to navigate uncertainty. We are joined by Todd Stankiewicz. He's co-portfolio manager at Free Markets ETFs. Todd, thanks very much indeed for joining us.
Thank you for having me.
That's an approach many investors take, isn't it? They just look for businesses that'll keep racking up profits no matter what happens in government or politics.
Well, listen, it's certainly a good strategy to look for companies that can rack up profits in a lot of different environments. I think that particularly with the Free Markets ETF that we're running, FMKT, is that we're looking for companies that are not just going to benefit from profits, but also look for companies that are benefiting from this deregulatory tailwind that we're seeing right now within the government, because we're seeing a lot of executive orders and a lot of legislation that's making business easier and lowering barriers to entries for a lot of different industries and stocks.
Right. So you have the Free Markets ETF. And its assets, I'm just checking its assets. That's interesting, though. It's a play on deregulation. Not a huge ETF at this stage. I'm showing only about $18 million US.
Yeah, we just started the ETF a couple months ago with a couple co-portfolio managers across a few different firms that have some areas of expertise in this space. So we are growing. We're seeing some more traction, and we're, delivering so far to help validate the thesis that we have.
So you have some ideas for us. Peabody Energy, BTU is the stock symbol, a giant coal producer in the US. What attracts you there?
Yeah, I think energy infrastructure is something that we have to focus on when we talk about deregulation, because there's a major push with this administration towards being leaders in AI. And if we want to do that, we have to build out the energy infrastructure to do that. And so we have to look at how we can do that effectively. Peabody Energy BTU is one of the positions that we have. It's one of the top holdings in the portfolio. And we were in very early on this situation as executive orders were allowing coal plants to stay online earlier or longer and make this a more attractive space. Previous regulation has really pushed back against that. But it's not just coal, it's across the board, right? It's how coal, natural gas, and even uranium play into this energy infrastructure build out. And I think Peabody is one of the leaders in that space when it comes to coal. And so that's a natural position if we want to look at coal plants and coal powering AI and energy infrastructure.
And of course, Mr. Trump has reversed policy by favoring coal.
Yes, definitively. And so I don't necessarily know if we're going to see coal plants popping up all over the country. But what we are seeing is we're seeing a lot of energy infrastructure, even utilities that were originally running to shut down and convert their coal plants. We are seeing them start to talk about how they're going to keep their coal plants online a little bit longer now because they don't have those headwinds that were originally there. And now they actually have tailwinds. And so this is allowing for a very cost-effective energy production. And I think it's going to be phased in, right? Coal allows us to produce a lot of energy today. Natural gas infrastructure is going to be the next phase, but we still have a lot of pipelines and infrastructure to build out to get that natural gas all around. And then we've seen a lot of legislation towards uranium and nuclear reactors. And we're going to see, in our opinion, more favorable environments towards that. And what we think eventually is that you see coal as a short-term play, natural gas as the intermediate term and middle play, and uranium as a long-term play to provide enough energy globally to power all this AI.
Yeah, so uranium energy, UEC, I mean, it is an amazing story. I mean, that's one stock you favor. You mentioned uranium, that the United States still gets so much of its nuclear fuel from Russia.
UEC is North American, and I think, we haven't had a favorable enough environment, quite frankly, recently for companies to really want to ramp this up. And so UEC is really vertically integrated in North America. So they're not just dealing with mining, they're dealing with the refining and really all the way into the power delivery. So companies like this, where we wanted to see the onshoring and more energy independence as it relates to everything, these are the types of companies that are going to make that viable to be self-reliant on getting that uranium and building this nuclear program that we're looking to do.
Here is another company I'm not familiar with that you like the look of, Circle Internet Group, CRCL. What do they do? Why do you see potential here?
Yeah, Circle Internet Group is one of the leading stablecoin issuers,
Huh?
and just went public recently, back in early July, I want to say. And we've had this in building a position in this throughout how it's been trading. But realistically, what's happened is the Genius Act that passed back in July, right, right around the time that Circle went public, is really pushing for regulation and providing a framework for stablecoin issuance in the United States. And so a lot of people have been focusing on cryptocurrency as a form of, let's call it like DeFi and stuff like that, decentralized finance. But stablecoin issuance provides really a type of crypto, the way to think about it, that's backed by US dollars. So there's actually something there. So you can actually exchange your stable coin, right? It stays stable for US dollars. And Circle has been a leader within that space. And they've been benefiting from a slightly higher interest rate environment that we've had recently. And we think that we're going to continue to see legislation and deregulation go towards this space. Because we've seen a couple other players come into it, but these guys traditionally have been the leader right there. And so we think that there's a lot of value to be able to unlock as we see basically stablecoin issuance go up as more and more people are transitioning to that as a form and a medium of financial transactions.
And finally, Joby Aviation, they're a leader in electric aircraft.
Yeah. So Joby and Archer are two big players in electrical vertical and takeoff vehicles, and there were executive orders that passed in early June. I think it was like June 6th or 7th that passed that really were talking about supersonic flights, lowering barriers to entry for these electrical vertical and takeoff vehicles. And a lot of people are thinking about them relative to air taxis. And there's even been targets for making these a viable transportation option by the Los Angeles Olympics. So this is where real dollars are going to. These are more speculative companies, but they couldn't have really thrived in the previous legislative environment or regulatory environment because they were so hampered by FAA regulation. But more and more of that is being peeled back and giving them a runway to grow. And we believe can alleviate a whole lot of things. I think even Elon Musk has spoken about how we need to improve transportation, allow us to get from one point to another very quickly. And that could allow us to live in different spaces and even alleviate some of the real estate stuff that we have going on here in the US.
Todd, thank you very much indeed.
Thank you.
Todd Stankiewicz, co-portfolio manager at the Free Markets ETF.